If you want to learn how to prepare financial statement with some key adjustments, this video is for you. Hi, I am the Commerce Specialist. Welcome to my channel where I create content covering learning outcomes of various academic qualifications and professional certifications, including life-changing business ideas and hacks. So let's prepare financial statement considering some key adjustments. Here I have created a question. It's a trial balance. We have prepaid insurance 18,750, cash balance 75,000, stock 18,750, salaries 26,250, utilities 33,750, rent 41,250, general expenses 48,750, repair and maintenance 56,250, plant and machinery 600,000, furniture 450, accumulated depreciation 26,250, accumulated depreciation on furniture 90,000. The other one was on plant. The previous one was on plant. Then we have account receivable 225,000, share capital, each share is for $1, 1 million. We have retained earnings 173,750, purchases 487,500, sales 712,500, unearned commission 25,000, accounts payable 53,750, totals are 2,081,250. Some adjustments are given here in the notes. Dividends declared 3,750, reserve created for contingencies 25,000, 25,000 shares were issued for cash, plant to be depreciated by straight line method, 8-year life, 0 salvage value. Furniture is to be depreciated by reducing balance method at 20%. Bad debts are estimated at 15% and closing stock is valued at 33,750. What is required is statement of comprehensive income, statement showing changes in owner's equity, and statement of financial position. Whenever you're preparing financial statement, the very first thing you need to understand is whether the trial balance totals are the same. So you have to add, this is the credit side, the first one is the debit side, total the debit, total the credit, both has to balance. If your trial balance does not balance, what happens when you prepare financial statement, in the end, your statement of financial position, which is balance sheet, it will not balance. So before we begin, let me tell you, I have created a video on basic financial statements where I have prepared financial statement, that is statement of comprehensive income and statement of financial position for a sole trader here without adjustments. So if you are new to preparing financial statements, I highly recommend you watch this video first. This financial statement is for a public limited company. So let's begin. As per requirement, we are asked to prepare statement of comprehensive income first. When we start off with sales. Sales is given to us as 712,500. So I'm writing it here, 712,500. This is my sales. Here, please remember, when there is sales, always check in the question for sales return or return inwards. So in this question, we don't have sales return or return inwards. If we do, then we will subtract it from here. So I'm just showing you, if it is there, you minus sales return. Sales return, another name for its return inwards. We don't have it, so I'm just writing an X here. You minus the first thing you need to calculate is net sales, which remains the same, which is 712,500. Your first step to prepare income statement, which is statement of comprehensive income, is to calculate net sales. How? Sales minus sales return. Another name for sales return is return inwards. In this situation, there is no sales return, so our net sales is the same as sales. Next step is less cost of sales, or you can call it cost of goods sold. It's the same thing. We start with opening stock. Now here you need to understand that the stock which is given in the trial balance, 99% of the time, the stock which is given in the trial balance, even though nothing is written here, it is the opening stock. 99% of the time, opening stock is given here in the trial balance and closing stock will be given to you here in the adjustments. So when you're finding opening stock, always take it from the trial balance which is 18,750. So I'm writing this in the inner column, 18,750. After that, you add purchases. Your purchases are here 487,500, 487,500. And there is one more thing. If given in the question, you always add, we call it transportation in. Transportation, carriage, or freight. If this information is given, you add. If it is not given, just leave it. So here I've just written it, but in this trial balance, we don't have freight inwards, carriage inwards, or transportation inwards. So I'm just writing an X here because it's not there. So I will add these three. Opening stock, purchases, and freight. When I add, I get stock available for sale. So remember, when you are calculating cost of goods sold or cost of sales, there are three items you have to add: opening stock, purchases, and transportation inward, carriage inward, freight inward. These are three names. Inward means when you purchase goods, how much did you pay for transportation? So if that information is given, you add. If it's not there, just leave it blank. So when you add these three items, opening stock, purchases, and transportation in, carriage in, freight in, you will get stock available for sale, and that comes to 506,250. From stock available for sale, you have to minus less closing stock, which is given here, 33,750. And if given, purchase return. Another name for purchase return is return outwards. So please remember, if purchase return or return outward is given in the question, you subtract. So what is happening here? We are adding three items: opening stock, purchases, and transportation inwards. We get stock available for sale, and then you have to minus two items from here, which is closing stock and purchase returns. Purchase return is not here, so I'm just putting an X. Had it been there, I would have taken an amount. So you minus. So you add 1, 2, 3 and subtract two items. You will get your cost of sales, or you can call it cost of goods sold, which comes to 472,500. Once you get cost of goods sold or cost of sales, you have to subtract it from net sales on top in order to get your gross profit, which comes to 240,000. So let me tell you, I'm not using calculator. I'm trying to calculate on my own. So you do the maths, okay? You use calculator and see, once you add these three items, are you getting 506,250? When you subtract these two, are you getting 472,500? Then from net sales, which is 712,500, when you subtract 472,500, are you getting 240,000? Okay? What is important is you follow the process, you follow the step, okay? Once you get gross profit, you have to add here other income. When I say other income is additional income for the business. Let's say their main operation is buying and selling cars. The company may have extra money, they may have invested in a bank and they get interest. Okay, the company may also, other than selling cars, they also do some consulting work from which they get some commissions or fees. Okay, so any other income, whether it be fee income, interest income, commission income, okay, rental income, or discount received. Discount received is called purchase discount. So purchase discount, fee income, rental income, interest income, commission income, any of that if you have, you got to add here. We don't have in this question, unfortunately, so I'm just writing 0. So still it comes to 240 only. Okay, had there been other incomes, we would have added. So gross profit add other incomes remains the same. After that, we are subtracting expenses, which are operating expenses. So one pro tip I want to give you is, whenever you're looking at expenses, always look at the debit column. In the debit column, you will find assets and expenses mostly. So from the top, if I look at expenses, the very first expense I come across is salaries expense, which is 26,250. So I'm writing here salaries expense 26,250. Then I've got utilities. Utilities is 33,750. We have rent 41,250. 41,250. General expenses 48,750. General expenses 48,750. Repair and maintenance 56,250. Repair and maintenance 56,250. Then we have plant and machinery. So obviously there will be depreciation. So if you look at note number 4, it says plant to be depreciated by straight line method. So there is a formula. Let's write here depreciation expense on plant. Now understand straight line method, the formula is cost minus salvage value divided by life. So cost of plant and machinery is 600,000. Salvage value 0 given here, 0 salvage value, and life is 8 years. So when you solve this out, you will get annual depreciation as 75,000. Then you have furniture. So furniture is to be depreciated in note number 5. It says furniture is to be depreciated by reducing balance method at the rate of 20%. So here I'm going to write here depreciation expense on furniture. Now since it says reducing balance, what we have to do is we have to look at the cost of furniture and subtract the existing accumulated depreciation on furniture. Okay, so if you look at the accumulated depreciation on furniture, it is 90,000. So 450,000 minus 90,000. Okay, so what we are doing is cost is 450,000. We minus existing accumulated depreciation, which is given in the trial balance, 90,000. Okay, and whatever we get on that, we apply this 20%. So into 20%. So 450 minus 90 is 360, and 20% of that would be 72,000. Then we also have here bad debts. Bad debts are estimated at 15%. Bad debt is a selling expense. So I'm taking that here. Bad debts at the rate of 15%. And please remember, bad debts is always on account receivable. Bad debt is the amount which you are unable to collect from your customers, from your receivables, from your debtors. So how much it is estimated this time? 15%. Though it's nothing is written here, 15% on what? But you should know bad debts is always on receivables. So 15% of 225,000, that will give you bad debts, estimated bad debts for the year, which is 33,750. Now we will add all the expenses. We will get total operating expenses. When we add all this, we get 387,000. This operating expenses are to be subtracted from your gross profit. You minus this. Now, I want you to pay attention. Your gross profit after adding other income is 240,000. So your gross profit is 240,000, but your expenses are 387. So what is happening? Your gross profit is less and your operating expenses are more. In that case, you will end up making a loss. And here there is a net loss of 147,000. Because your expenses are more and the gross profit is less, loss is reported in negative. This is your net loss. For company accounting, After preparing statement of comprehensive income, you have to prepare statement showing changes in owner's equity. That shows you what was the owner's equity items at the beginning of the year, during the year, what were the changes in them. When I prepare it, I'll make you understand how it is done. So let's have a look. Because there is shortage of space, I'm going to make it here. Okay, so I'm calling it statement showing changes in equity. Statement showing changes in equity. Now, when you look at equity items, we have share capital, we have retained earnings, okay, and we also have reserve here. Okay, so what I'm going to do is I'm going to write the opening balances. So I'm writing here opening balances of share capital, opening balance of reserve, opening balance of retained earnings, and opening balance of reserve, and then a total if you want to. So opening balance is here in the trial balance. Share capital is 1 million. Retained earnings are given here 173,750. And reserves, there is nothing here for reserves, so I'm taking it as 0. Now what happened during the year? If you look at note number 1, dividends were declared. So I'm writing here dividends. Please remember, whenever dividends are declared, it is subtracted from retained earnings. How much? 3750. The double entry when dividends are declared, it is retained earning debit, dividend payable credit. Retained earning debit means it has to be subtracted. As you see, retained earning is a credit here. When you declare dividends, retained earning is debited. Debited means you subtract. So the very first thing, we are declaring dividend, so it has to be subtracted from retained earnings. It will affect your retained earnings. Then you also take this into account. You had a net loss. Okay, so you can write here net loss. Because it is in loss, so it will be in under brackets, which is 147. This would also be subtracted. Next, you're talking about reserve was created for contingencies 25,000. So I'm talking about creation of reserves. Reserve created. Whenever reserve is created, money goes out from retained earning. So a reserve of 25,000 will affect retained earning negatively. So it will be subtracted from retained earning and it will come into reserves account. So whenever a reserve is created, the double entry is retained earning debit, reserve for contingencies. Contingencies mean unexpected future payments. In good time, we don't forget the bad time. It's, we say always save something for the rainy days. So in good times, if we have something in retained earnings, what we do is we set aside some amount and call it as a reserve for contingencies. In future, maybe there are some unexpected future payments to be done, so we can use this reserve then. So when we create reserve, the double entry is retained earning debit and credit the reserve. So when we debit retained earning, that means it is subtracted from here and it goes into a reserve account here. Then it also says here, number 3, 25,000 shares were issued. So I can write issuance of shares. Obviously, we are issuing 25,000 shares and it says one share is for $1 here. So 25,000 into 1 will be 25,000. When we issue shares, share capital increases, it comes here. So in the end, what is happening? This becomes 1,025,000. Now 173 is positive and all these 3 are negative. So when you net them off, you will get a minus 2,000 and 0 plus this is 25,000. So finally, when you net these amounts off, 1,025,000 and 25, 1,050,000, minus 2, this will give you 1,048,000. This is your statement showing changes in retained earnings. Ladies and gentlemen, obviously this is one small question. I cannot include all the possibilities in it. But I want you to remember that there are more adjustments possible. For example, we have salaries expense. See here, salaries expense, 26,250. Maybe in additional data, we get prepaid salaries. So if there is prepaid salaries, we minus from here. From this salaries expense, we minus prepaid salaries. On the other hand, in the additional data, we may get salaries payable. So if we get salaries payable, then that is to be added here. So if at year end, these notes, additional notes are given at year end. At year end, if there is an ending prepaid balance, that is to be subtracted. I am writing here ending prepaid. Ending prepaid is to be subtracted. If there is a closing payable or outstanding, that is to be added. Which means you will take salaries expense 26,250. If over here it says salaries prepaid, you will minus. Over here, if it says salaries payable, salaries outstanding, salaries payable, then you will add. So 26,000 minus prepaid, add outstanding, that final amount you will take here as salaries expense. For example, rent. Rent is given here as 41,250. And here in the additional data, you may get prepaid rent, some amount, say 4,000. So what you're going to do is you take 41,250 here, minus prepaid rent 4,000 and take the remaining there. On the other hand, if here you are given rent outstanding, so you take 41,250 and add outstanding rent. So what happens, please make a note, this is very important. You take the expense from the trial balance. If there is prepaid closing balance, you minus. If there is payable or outstanding closing balance, you add. If there is prepaid opening balance, you add. If there is outstanding or payable opening balance, you minus. Okay, so I'm making a small chart for you here. I'm writing here prepaid and I'm writing here payable. Another word is outstanding. Opening balance and closing balance. Closing balance of prepaid is subtracted and for payable closing balance is added. Opening balance of prepaid is added and opening balance of payable is subtracted. From what? From the expenses given here. So you may have prepaid opening balance and closing balance. So what you're going to do is, let's say I'm talking about this salaries. Okay, this salaries amount. So in 26,250, if there is prepaid opening and closing, so opening balance would be added. Opening balance will be added and closing balance will be subtracted for prepaid. If there is payable also, then you take 26,250. If you're talking about payable, then closing balance will be added and the opening will be subtracted. And this applies on all the expenses. So check for in the additional data, in the notes, if there is opening and closing balance of prepaid or payable. If it is, follow this. Take the amount of expenses from here and do the adjustment. Opening balance of prepaid is added, closing is subtracted. Opening balance of payable is minus and closing is added. And final amount of expenses you will be taking here. I told you about straight line. In straight line, what you do is just take I told you about depreciation expense. Straight line, just take the cost of the asset which is here. Okay. And use the formula cost minus salvage value divided by life. Here we do not take into consideration the accumulated depreciation on plant already. In straight line, it is on cost. Cost minus salvage value divided by life in years, we get annual depreciation 75. But in declining balance method, you have to take the cost of the furniture, which is 450, minus the existing accumulated depreciation. Okay, you will get net book value cost minus accumulated depreciation, you get net book value, and then apply this 20% in order to get annual depreciation. When it comes to bad debts, it is 15% always on closing receivable balances. Okay. So now that we have prepared your statement of comprehensive income, and unfortunately we are making a loss. After that, we prepared statement showing changes in equity, share capital, opening balances from the trial balance, and then as per the data given here, dividends are subtracted from retained earnings, net loss is subtracted. Had we made a profit here, we would have added. This would have been without bracket if it was a profit. Reserve created is always subtracted from retained earning and added to reserve account. Shares issued additionally will increase your existing share capital balance. So it has become 1,025,000. This is minus 2,000. This is plus 25,000. When you add all of them, finally you will get 1,048,000. Now the next step is to prepare statement of financial position, which you call balance sheet. Now when we are preparing statement of financial position, which is the balance sheet, the process is simple. What we do is, first we take assets here. Now, when I say asset, there are two types of asset, non-current assets and current assets. So we begin with non-current assets. Current assets. We have plant as the non-current asset. The cost is 600,000. See what I'm going to do here. Plant. The cost is 600,000. How much is the accumulated depreciation on plant? 26,250. You minus that. 26,250. What is the current year depreciation on plant, which is 75,000? You minus that. So from the cost, you minus accumulated depreciation until last year, depreciation expense for the current year, you will get book value, which comes to 498,750,000. Then another one, we have furniture. The next non-current asset is furniture. So you write furniture here. The cost of furniture is 450,000 here. So I'm writing here the cost of furniture, 450,000. Accumulated depreciation until last year is 90,000. You subtract that. Current year depreciation on furniture is 72,000. So you minus 72,000. You will get net book value, which is 288,000. Add these two, you will get total non-current assets, which is 786,750. Next thing you'd like to do is write current assets. Please remember, when you write current asset, always begin with closing stock. Where you get closing stock from? Here in the additional data. Closing stock is valued at 33,750. Alternatively, you can pick it from here as well. It's the same amount, 33,750. So I'm writing here closing stock. $33,750. You also have account receivable, one of your major current assets. So I'm writing here accounts receivable. Now for account receivable, remember the value given in the trial balance is 225,000. So I'm writing that here 225,000. But there is a provision for bad debts. If you notice, 15% may go bad. So you minus the bad debts, which is 33,750. So your net receivable comes to 191,250. If you look at here in the trial balance, always check. We have prepaid insurance, which is a current assets, 18,750. Prepaid insurance, 18,750. We also have cash 75,000. Now pay attention here, please. Cash given in the trial balance is 75,000, and obviously here in number 3 it says 25,000 shares were issued for cash. One share is for $1. So when we sell shares, the double entry is cash debit, share capital credit. So when you sell shares, share goes and cash comes in. So 75,000 is already what we have from last year, and we sold more shares in note number 3. So as a result, we got 25,000. So cash adjusted balance would be 100,000 here. So now you add all these, you will get total current assets, and that will be 343,750. Then you take your total non-current assets and total current assets, add them up, you will get total assets, which will be 1,130,500. Guys, first part of the statement of financial position is done, where I have taken all the non-current assets, all the current assets, and I've added them up. Please remember about depreciation. You have to minus accumulated depreciation until last year, which is given in the trial balance, and the current depreciation in order to get net book value. Likewise, when you're doing account receivable, make sure you minus the bad debts from here. Okay. Cash balance is very self-explanatory. When you sell more shares, more cash will come in. That's why I added 25,000, because we are selling 25,000 share. One share is for $1. So how much money we got? 25,000. Next step is about the shareholders' equity. Okay. So I'm writing here shareholders' equity. Shareholders' equity. Now in shareholders' equity, what you do is you write share capital. From here, the final balance 1,025,000. You take retained earnings, which is minus 2,000. Retained earnings, which is minus 2,000. You take reserves, reserve for contingencies, which is 25,000. Normally you also have share premium. So I'm just writing here, just in case if any other question you have share premium, take that. Here it is not there. So add them up, you will get this amount, 1,048,000. Then you talk about your current liabilities. If any. Okay, let's talk about current liabilities. We have unearned commission. We have accounts payable as current liability. Okay, so let's take them. Unearned commission. Unearned commission is 25,000. We have accounts payable 53,750. Accounts payable 53,750. We also have dividends payable. Remember, it says declared, but it's not paid. So that means we still have to pay dividends payable. Which is 3,750. Let's add all these. You will get total current liabilities, which comes to 82,500. You may have long-term liabilities. Although they are not given in this question because there is a shortage of space, I cannot put everything here. But to make you understand, I'm writing few here. These are normally which may come under long-term liability is bonds payable or debentures payable, or we talk about mortgage bond, mortgage payable, okay, maybe a bank loan which is payable in for more than 1 year, okay. So you may have bonds payable, debenture payable, mortgage payable, bank loan which is payable in more than 1 year's time. You may add all of them and write here, because here we in this question we have nothing, so I'm just putting 0. Now you add your shareholders equity. This is your shareholders equity, your current liability and your long-term liability, and see how much you get. You will get 1,130,500, and this is your total equity. This is how financial statements are prepared for a public limited company. First, you prepare statement of comprehensive income. You arrived at net loss. After that, prepare statement showing changes in equity. Then you go on to your financial position. Guys, what is important here, you understand the process, the format, the workings, okay? Don't tell me in the comment that it is not coming 22,500, it is coming 22,800. You do the maths, you're using the calculator. I'm not using the calculator, okay? What is more important is to follow the process, to see the steps, to look at the logic, what comes where. That is more important. If you have any question relating to financial statements or this particular question, leave a comment. I will reply to you. If you're not yet subscribed to my channel, please subscribe. That's one way to show that you value my work. If you like this video, give me a thumbs up and share this video with all your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.